Thank you, Anka, if you're still there. That was quite the energetic presentation. Great. So tough act to follow. Anyway, let's go ahead and get started. Today, I'm going to talk exclusively about the Forex market, and I want to go over 5 masterful tips to elevate your Forex trading, plus leave you with one secret weapon. Before I get into it, though, for those of you that don't know me, hello, I'm Kim Krompass, and I'm the founder of the Price Action Traders Institute. I've been in the markets for 21 years, and 16 of those have exclusively been in the Forex markets. I developed the only price action trading method for Forex traders, which utilizes my proprietary 20-second trade planning process, which you won't find with any other Forex trainer or trading. I also happen to be a CPA. That's a certified public accountant for those of you that live outside of the US, which simply means I'm a numbers geek. And a fun fact about me, I live in the beautiful California wine country. So let's go ahead. And before I get into the 5 tips, I want to just ask a few questions of people, and particularly traders that maybe have been around or are even thinking about it. So I want to know if you've been trading for a few years in the Forex market, or maybe outside of it, and you're still struggling to make consistent profits. Or perhaps you're someone I just mentioned who's brand new, who wants to learn how to trade Forex, and you'd like to avoid some of the mistakes a lot of traders make when they first get started and maybe get on a good path. Maybe you've taken a lot of different courses, you've spent thousands of dollars and even hundreds of hours, only to be disappointed because you just can't seem to make money, or even worse, use their method. Doesn't matter if you're a beginner, you've never traded before, or you've been trading for a while. This webinar, this presentation, I want to help you break free and maybe show you something a little bit different than maybe some of the presentations you've heard. I also want to know from the traders who've been around, if you recognize any of these. When you look at your charts, does it feel like what you're looking at is kind of overwhelming and breaks your head? Does each one of your trade plans take hours of time, or even longer, days, and research? And when you're done, you're still not really quite sure? Or do you ever get the feeling that you're just never going to get this, no matter how much money or time you put into it? Or do you wonder why most traders you hang out with aren't making it too? There's a lot of that going on, especially if you're on social media. Or maybe you're like me and you're just tired of, or you got tired of listening to podcasts or watching videos on YouTube made by internet marketers posing as traders, or worse, as psychologists. So wouldn't it be nice if trading wasn't so painful? Well, good news, it doesn't have to be. You just need access to the right information and some coaching from a real trader to help you get going. Before I get into the 5 tips, I'd like to just lay a little bit of background or give you a little bit of context for what we're about to talk about. Most of you probably remember the global financial crisis back in 2008, 2009. And if you didn't have an experience with it yourself, I'm sure you know someone in your family, a neighbor, a distant relative, a friend of a friend who went through that time period. It was pretty radical. The moves in the market were outsized, and they were really devastating for many traders, myself included. And in fact, one of the biggest things that I got from that whole time period was that holding trades overnight became extremely dangerous and were very high risk. And again, I'm talking about the Forex market. I can't really address other markets. But after living through all of this, and I mean just barely making it through, I knew that there had to be a better way. I had already had a track record of success. So I was familiar with how to make money. It was now a matter of how do I keep it and simplify the entire process. So some more good news. Of course, there's a better way. There always is. You just have to be willing to dig in deep and find it. And it would be the start of what would become known as the PATI method. And PATI stands for Price Action Traders Institute. And I'm sure all of you probably already knew that, but just in case you didn't make the connection, That's what it stands for. So it all started back in 2010, and I launched training in 2012, late 2012. So it took me 2 years in development and actually live trading the method before I began rolling it out and teaching it to other Forex traders. The padding method teaches Forex traders how to successfully trade without losing sleep, losing their minds, or losing their entire accounts, and actually how to make decent money again on a more consistent basis. So I want to go through and just list out the 5 tips that I'm going to be talking about briefly here, and then I'll dive a little bit deeper into each one of them so you get a really good feel and understanding for what I mean. The first one is giving up multiple time frame analysis. This is something that if you've been a trader for a while, you know that it is often taught to traders in other markets too, and it's taught in the Forex market. Eliminate back testing. That's another one. It can be a trap. It is a trap for traders. I'm going to go into 6 reasons why it's a fail. And give up the need to know why prices move, which is a big one, which hinders traders and holds them back. The fourth one is showing traders how to use very tight stops and fierce money management. And lastly, have a simple and repeatable trade planning process. So these first 3, giving up multiple time frame analysis, eliminating back testing, giving up the need to know why prices move, those 3 are all time wasting and energy sucking. The last 2, using tight stops and fierce money management and having a simple and repeatable planning process, is what charges traders up. It helps increase your energy and it will build your confidence. So let's get into tip number 1, giving up multiple time frame analysis. It's really been a myth for at-home retail level traders that you had to look at multiple time frames in order to get confirmation of a trade direction, of a trade entry. This was taught to all of us. If you're an old dog like I am, then you were most likely, you were raised on this myth that you had to look around. So what happened to us when we did that? Well, there was conflicting information that appeared between and among different time frames. And I'm going to show you what I mean actually by looking at some charts. It also stopped many of us dead in our tracks because we went into that really confused state called analysis paralysis. You know, the one where you walk into a grocery store and you just want to buy, I don't know, let's say rice. And you look at the shelves and it's lined from floor to ceiling with 6 shelves of all different kinds of rice. And you're like, oh my God, I just wanted to buy rice. And that's what happens when you look around at different charts. You get overwhelmed and you can't see the forest from the trees. So the result, of course, was doing nothing because of overwhelm and oftentimes missing a great trade, which then perpetuated and fed this cycle of self-doubt in traders, which is a big problem, lack of confidence, right? So let's look at an example of what I mean by this. So here is a 15-minute chart on the British pound. And here I have some trend lines drawn. These are moving averages. And then here's a MACD down here. And now theory and teaching used to be, well, jump up to a 30-minute chart. Leaving the trend lines on, this is what it now looks like. The moving averages have crossed. Over here, they just touch or kiss, like a lot of traders would say, and they bounced off of one another. This one, they actually crossed. And then the MACD is completely different looking. And then we jump up to, in the cycle, a 1 hour, because it used to be you'd look at 3 sets. So maybe it was a 30-minute, a 1 hour, and a 4 hour, whatever sequence, 1 minute, 5 minute, 15. Use, choose your own adventure, basically. So in this case, the trend lines are still here. They look completely different than these over here. The MACD looks totally different, and the moving averages have not come together and kissed, like they did on the 15-minute chart, nor have they crossed like they did on the 1 hour. So as you can see, or the conclusion you should draw is like, holy hell, they look nothing alike. Which set of trend lines do I use? Which MACD do I pay attention to? And worst of all, where's my entry? And where's my stop going to be placed? So this is why I say tip number 1, give up looking at multiple time frame analysis. Now, this may fly in the face of long-term traders. I get it. We're not long-term traders in the Forex market. Ever since the financial crisis, that's no longer a play for us, unless we're institutional. And I'm not talking to institutional traders. I'm talking to, hopefully, at-home retail level traders. So the padding method teaches traders to look at only one time frame, and the 15-minute chart is our golden goose. It works like magic for us. There's no cross-referencing or getting confused by having to use multiple charts. It's essentially one and done, and it's straightforward, that allows us to rinse and repeat. Moving on to tip number 2, eliminating backtesting. So I told you at the start of this, I wanted to give you 6 reasons backtesting doesn't work. You never get the real feel of market action, so there's no consequences that are felt by a trader or things you have to deal with. Backtesting will never show you exactly what your broker will do to you. There's a lack of transparency. And I'm really, again, I can't stress, this is the Forex market. And if you've been in Forex or know about it, you've heard the stories that it's still kind of like the Wild West. Yes, it's been regulated in the regard that we can't have an offshore account anymore. We haven't for years. But the one thing that we don't have is transparency of pricing. So what you see on one broker will not necessarily be the same on another broker, even if they're both in the US. So there's this complete lack of transparency, just as it is. But then when you throw your trading into a backtester, it's even worse. So it can create a false sense of, oh yeah, this strategy really works when you're using a backtester, which might be a false positive, or worse, hey, this strategy is garbage. It just doesn't work, which gives you a false negative. In the end, what that means is that you could be passing up on a great strategy and not know it, just simply because of the fact you've got a false negative in your backtester. The other important thing is red news. Red news is huge in the Forex market. We stand aside, meaning we get flat in front of any red news economic event in both the London session and the New York session. And then there's a method that I teach in my course that teaches Forex traders specifically a method to trade red news events. When you're in a backtester, you are not going to get the flavor and the feel of a red news event and how to trade them. Therefore, missing out on a little bit of creme de la creme, if you will, on your already good trading results. You'll also never be able to look at more than one pair when you backtest and miss out on an entire segment of what we call across the board signals, meaning we can look at multiple pairs at once in a live active market. And it helps traders hone in their price action reading skills. And when you're in a backtester, you're just not going to get that same attribute. And then lastly, have you ever known someone, or maybe you've done it yourself, that says, hey man, I just looked at the euro dollar and I did it over 2 days and I crammed in 6 months worth of data and I traded it in less than 2 days. And it's kind of mind-boggling, because what they're saying essentially is, hey, I've compressed 6 months of trading data or trading experience into 2 days. That's not real world trading. And the worst part of it all is you leave with no actionable skills or lessons. It's impossible to get that kind of experience, 6 months of experience in 2 days. It's just, and mentally, it's not possible. So these are the 6 key reasons backtesting doesn't work. And again, this is, a controversial topic, because I know there are traders out there that believe in backtesting. And what I would say to backtesting, there may be a couple good things, but one good thing that definitely sticks out is just getting used to identifying trade setups. And that would be it. In fact, I see backtesting like playing a bad version of a video game. It's just not real. There's no real likeness to live trading at all. Ask anyone who's been in a demo account. And in fact, one of the solutions to backtesting is to get yourself into a demo account and just get a feel for market action. Because I guarantee you, once you go into a real account and you put your real money on the line and your mouth on the line, there's nothing like it. Of course, the best solution is to trade a real account with the lowest amount of risk and to watch how your emotions play out when you have money that you could potentially lose, or on the opposite side, make a lot of money. So my bottom line on this is ditch your back testing, save your money, and save your time. Start with a demo, get a feel for your broker and how, what buttons to push and how to set your stops and how to move your stops and how to put in pending orders. Get all the functionality down in a demo account first. And then once you're happy with that, or you feel like you've got it under control, then move into a real account, make it small, and try it out. Tip number 3, give up the need to know why prices moved. So why shouldn't you care about the why? That's kind of meta. You say you want to make money, right? Every trader does. If they didn't, they would be telling you a lie. Then I would suggest that you leave your economics, business, finance degree, or your big brain behind when you sit down to trade. Now, I have a personal story about this. I have an advanced degree in economics and business. And one of the things that really, really, really held me back was thinking I knew what the market was going to do because I understood economics. I understood why the dollar should drop. I understood why the dollar should strengthen. Well, no, you don't. You may if you're an analyst, but if you're a trader, oh, that's like a huge faux pas. It holds you back. It confuses me. It confused me many times. I thought I knew what the market should do based on my knowledge. And it was like the worst thing and something I had to really work hard on letting go. The Forex market is huge. I'm sure you've heard of it. There's no way any of us can know why prices move. And I encourage everyone to leave it for the analysts to chew on. Now, can we attribute things like yesterday when Fed Chairman Powell began testifying in front of the Senate Banking Committee? He indicated that rates were going to be raised and the dollar went ballistic. So can we attribute that move on the dollar to what he said? Yes, definitely. But it was all after the fact. In fact, I had no idea. The market was moving so fast and I was busy making money on these stellar moves that I had no idea what he had said until after the fact. When I had time, I closed out all my trades, booked my profits, sat there with a cup of coffee and said, okay, what the hell just happened? And that's when I knew it was because of what he said. So while you're trying to figure out the why, you've probably missed a move and you've missed your opportunity to make money. So why prices moved is best suited to be discussed over a good cocktail and appetizers at the beach, not when you're trading. Cheers. All right. So what happens when you give up the need to know why? Because I think that's important too. You're better positioned to quickly adapt. So your mind's in a place of not focusing on why this is happening. It's focused on the actual price action right in front of your eyes. It helps you stay in the now instead of worrying about why prices move. And instead of worrying, what I'm trying to say here is that your mind will get distracted if there's a conflict of what you think price should be doing versus what it is doing. And that causes traders to stumble and miss opportunities. Focusing on price action gives you an unfair advantage when it comes to booking profitable trades. It's one less thing we have to think about. You'll find it easier to leave any preconceived ideas or beliefs about why prices move, and it prepares you for anything that might happen in the market. You know, there's a saying a lot of us say, which is expect the unexpected, because that's the mindset of a trader. You have to expect the unexpected. Otherwise, you're going to be thrown back on your heels and you're going to be wrong-footed very easily. And then most importantly, knowing the why won't give you any better results. Tip number 4, use tight stops and fierce money management. In the course and in my membership, I have a list of recommended stops and I go into depth on money management. But Paul Tudor Jones here on the left-hand side of your screen has a great quote that says, to make great sums of money, you first have to learn how to lose much smaller sums of it when you are wrong. And I didn't understand that in my early days of trading, but now I do. In fact, it's something I live by. And I show traders how to use 8 to 12 pip stops. It's dependent on the currency pair we're trading, and show them how easily it's done. And I also encourage everyone to trade small. And in fact, when you're first starting out, you want to trade with 0.25% to 0.5. And how does this help you as a trader? Well, first off, fear and doubt, which are really, difficult feelings that every trader experiences. It's not like you ever get rid of it. But knowing that you have a tight stop and knowing that you're not risking your entire life savings or your rent or your mortgage payment or whatever really helps mitigate those fears from taking over your lizard brain. And it also gives you more opportunity to maximize your profitability. In fact, in the course, I go into this, there's this big debate that goes on in the traders community in Forex trading, might go on in other communities, but I'm very familiar with it in Forex. And it's like, well, you can use an 8 pip stop and lose $100, but why not use a 25 pip stop or a 50 pip stop and lose the same amount of money, $100? And I go into this example and kind of blow it up on its head and show you why it's much better to use a tighter stop, because it makes recovery trading so much easier, because you can get your risk to reward much higher once you're in a winning position. So one more quote from my guy, Paul Tudor Jones. He said, at the end of the day, the most important thing is how good you are at risk control. And that's really the bottom line. So tip number 5, use a simple and repeatable trade planning process. And I have 6 benefits of a simple trade planning process, and then we'll talk about repeatable. Number 1, when it's simple, it builds confidence. Number 2, it's quick to learn. Anyone can learn this. In fact, I have some traders who have college age kids and even younger, high school, that are able to pick up this method so quickly because it's so simple. It's like a video game. 3, it can be applied to any currency pair. 4, anyone can do it. As I just mentioned, it could be teenager, college age kids, or even older people too. Hell, as long as you have your brain about you, you can do it. You know exactly what to look for on a chart when you have a simple process. And best of all, if you've been trading for a while, this will help you enjoy trading again. In fact, it's so simple that Ray over here on the left-hand side just wanted you to know how much I appreciate what you've taught me. I see a chart and I see something completely different before. And that's one of the promises and guarantees of learning the 20-second trade planning process, is that it's going to make you as a Forex trader see charts in a whole different light. Simple works. It's been proven. Neuroscience proves it. Psychology proves it. It just works. And VJ, who's been with me almost since inception and still is a very active trader today, even though he's a doctor. He responded to someone asking about the PADI system on Twitter, and he said, "You came to the right place, brother. The PADI system is so simple, so easy to follow, and execute that you'll start questioning if trading could really be simplified this much." And that's why a lot of traders who have gone through this understand that simple really does work. So what about the repeatable part of this tip number 5? Why does a repeatable process also win? Well, a repeatable trade planning process is like having a template. We all like templates. We like recipes. We like frameworks. We like guidelines. Templates are easy to use every day. There's no reinventing of the wheel. It leaves out guesswork for traders. It makes analysis paralysis a thing of the past. So it helps with that first tip about using multiple time frames, because that, remember, throws traders into analysis paralysis. And then it promotes a positive attitude about trading, because you can sit down literally once you learn the method. You can sit down, open any chart. You don't even have to know what currency it is. Doesn't have to have a label on it. And you can instantly know within 20 seconds or less what you're looking at and what to do. You also, when you are in this repeatable and simple process, you join others who are using the same process, and you'll be taking the same trades and know that you're on the right track. Now, if a trade doesn't win and it loses, it hits our stop, but everyone else in the group took it, you know that you didn't do anything wrong. You followed the criteria, you followed the plan. It's just the market didn't move. Let's go ahead and just quickly summarize the 5 tips. Give up multiple time frame analysis, eliminate backtesting, give up the need to know why prices moved or move, use tight stops and fierce money management, and 5, use a simple and repeatable trade planning process. So the secret weapon that I wanted to add in at the end was get rid of your indicators and watch your trading success take off. Now, again, I know this is controversial too, just like talking about backtesting being a failure is controversial. A lot of traders use indicators in other markets, and that works for them. That is super. But in the Forex market, you definitely don't need indicators. In fact, it will help you simplify your trading and help you actually make more money. So getting rid of indicators. Now, imagine if you didn't need any of these things. And these are just, this is not a comprehensive list. This is just a part-time list of how you can help simplify your trading. So you don't need to have institutional experience. You don't need harmonics. You don't need special charts. You don't need fibs. You don't need pivot points. You don't need any kind of indicators, which, as you all know, includes moving averages, MACD, RSI, all these different things. You don't need any of them. So bottom line, as Lisa says, why do we get so mad when people waste our money, but we don't get as mad when people waste our time? So one of the things I'm really conscious about in the course is not wasting people's time either, and getting right to the heart of the matter, keeping the modules super short, consumable bite-sized chunks so that you can consume something, go out and try to apply it and see how it works for you. In fact, not one trader I know or have ever encountered has ever said this and then gone on to make great sums of money. Like, I don't hear them saying, oh, I can't wait to tackle all those blog posts about the MACD and harmonics. I'll feel so inspired by them and my trading will be forever changed. No, most traders go, give me the bottom line, tell me what to do, show me what to do. I want to make money. So make simplification a habit in your training. In fact, demand it. Demand it of yourself and demand it of whoever you learn from. So, are you ready to build your confidence? If you're new, maybe you just want to get on the right path with a great group of traders who use a proven method. And you don't want to make the mistakes that a lot of new traders make. You want to simplify your trading process. You want to free up more of your day to do the things that you actually love to do outside of trading. How nice is that? Stop wasting time and money studying indicators and having to sit on a back tester. You can jump into the course and find out how a 20-second trade planning process works and why it's one of the simplest guaranteed processes out there. And if you've been trading a while, maybe turn your not so great trading results around, learn that you can start making money and actually enjoy trading. What I wanted to do was show you some charts because I've, really hammered home this thing about having no indicators, eliminating back testing, not looking at different charts. And I want to show you just a few charts of what our template looks like, because we do have a template. So this is a euro dollar from yesterday. This little yellow line here is something you draw on once you identify a chart or a trade. It just gives you a visual as to where you want to put your order. So this was a sell right off this point right here. And there's an analysis that takes 20 seconds to identify this point. And in this trade, the market started moving. This was obviously when Powell was about to begin speaking. And I had moved my protective stop here to lock in 12 pips. And the trade went on. Here was the target. So what happens is right before you get into a trade or you don't have a trade on, the chart is completely naked, which I'll show you. Once you open a position, though, these levels, we call them levels, are printed. They're profit-taking levels, targets on your chart. These print. Once you close the trade or it hits your stop, these will all disappear and it goes back to a clean chart. This is the Australian yen from yesterday. Also, this another example, identified this trade, just opened the chart, looked at it, said, okay, here's my entry, got into the trade, moved to lock down here. And this is heading down into its target, which these trades all hit their targets because the market really took off yesterday. Here's one going long on the dollar Swiss. Same thing, open up the chart. Okay, beautiful. I like this entry. I'm going to take it long, locked here and targeted up here. Now, let me show you the euro dollar just as one example. So this trade, which was entered at this point where that yellow line was that you saw on the first chart with all the numbers, and this trade was closed for 51 pips. And this is what happens after we close it. All those target points, target levels on the way down on this short are wiped off. So you're ready for the next trading day. The chart is clean. The only thing you have to wipe off is this yellow line, because you're probably going to have a yellow line for the next day of trading. So I want to talk just briefly, if you're interested in joining us, if you want to become a Forex trader, love to have you. Or if you've been trading Forex and you're just not happy with your results, maybe I can show you a different way. And I have two services or products. I don't even know what to call them really. There's the Command Your Trading online course, and there's the Patty membership, which are two different things. But in this special for this online conference, I want to go ahead and offer you what I call a bundle list for both of these things. And you can get 1 month free. Normally the membership is $197 a month. But if you go to priceactiontradersinstitute.com/independence, you can get 1 month free in the Patty membership. So let's say you decide to join the group. You like what you heard today. You're interested. You'll get a username and login. And when you do, this is what you'll log into. It's called your dashboard, your client dashboard. And here you'll have on this tab, which I have highlighted for this screenshot, you'll have the courses. You'll have the beginner's track for people who are brand new to trading, and then the main track where the meat on the bone is to say of the course. This tab will bring you into the membership, which I'm going to drop into next. And then there's an announcements tab, which is very important. Then of course there's a support tab and managing your account. So that's what you get when you sign up. If you sign up today and take the course bundle, you'll get both those things, the membership access and for 1 month. And then it's only $99 a month if you decide to stay past the 30-day free month. All right, so now I've clicked on this membership tab. There's a get started. You click these drop-down menus. I click down here on the webinar recordings. We do a webinar 2 times a month. It's the first and third Wednesdays a month, and it's Q&A or a topic. It could be technical training. It could be trade plan evaluations, which is really interesting because on these webinars, I will actually take screenshots of our trade plan session in the morning and then show you and compare my trades for the session to what the market did. And I'll put our trade plans to the test. And then there's just the members Q&A, which encompasses a lot of different things. And then of course there's trader psychology. So there's a lot of things in here. And then the announcements tab, which is really an important tab. I do a weekly newsletter just for members. It comes out on Sundays, 11 a.m. Pacific, and it comes out at 2 p.m. Eastern. And in that weekly newsletter, there's a link to click to it to read, and just gives you a brief overview of what we are talking or what I'm talking about in that newsletter for the week. And then we always have a link to what our latest webinar was. And on the 1st of this month, we had Jared Tendler, who's the author of The Mental Game of Trading, come in and do a presentation about his book. And that was a lot of fun. So that's it in the members area. So let's look at the course, just a quick overview of what's inside the course. Obviously, you can look at all of this online. But again, it's priceactiontradersinstitute.com/independence. And what you see here is just a little bit of listing of the modules and PDFs and et cetera. So let me just highlight, though, a couple things. Here's one of my favorite, the 20-second trade plan. We've talked about this during this presentation. It's in this module that I teach you everything there is to know about learning the 20-second trade plan. And then the other one is red news strategies. Remember, I said red news trading is a big thing, and that when you use a back tester, you don't get a feel for red news. And in this, you actually learn the method I use to trade red news and what a lot of others use. In fact, VJ, the one I mentioned, who tweeted to someone about how simple this course was, he pretty much now these days is become just a red news trader because of his schedule and travel. And he kills it. I mean, he does way better than I do. So red news, really important. So 20-second trade plan, red news strategy. And then, of course, the art of risk management is very important. And wake up excited to trade. This is a really important module because I'm going to go into the best times to trade London and New York. Those are the 2 sessions we trade. And you get an overview of the process and some of the success levers that we use. And if you have a job, you can learn how to successfully trade this method and still keep your job, like many traders do in the group. In the membership, so this is the other thing you get for 1 month free. Joining into the membership is really kind of the interactive arm of the course, if you will. It brings the course to life. It brings your trading to life. You get to interact with me for the New York session and Kevin, who runs my London trade planning session. And if you can't make it to a planning session because of a call, a meeting, or family, you can always go into the members area and see and listen to one of the recordings. So we record these and then we try to put them into the members area as quickly as possible, right after we're done planning. And the New York trade planning session begins at 9 a.m. Eastern, 6 a.m. Pacific, my time. And London begins at 7:30 in the morning in London time. And Kevin, again, runs those sessions. So we put those sessions in there for you to quickly review or come back and say, how did I trade compared to the trade plans? What did I miss? What did I do well? That's all available to you. So I'm offering a special just for this conference. It will end tomorrow at 8 p.m. Eastern, but you'll get this course bundle, which includes the entire Command Your Trading course, along with access to the Patty membership for free for only $297. And again, the special pricing ends Thursday, tomorrow at 8 p.m. Eastern, and then it will go back to its regular price. So I'd like to say thank you for listening. I know you have a choice, and I'd be open if there's any questions. I'm very happy to answer any questions anyone might have. David? Is there a way for me
to... yeah, can you see the chat?
Do I just click on chat?
Yeah.
Okay, let me see.
It should be in the Zoom menu.
Okay. Let's see.
Are you able to see that?
Yeah, I think so. Okay. I'm just
trying
to ferret out where the questions. I see comments, which is great. Okay, John says, what is the how, what pairs, what time of day, where 15 minutes? Yeah, it's essentially a price action trading strategy. And I look at 9 pairs in the morning. So I don't overwhelm traders, because you look at too many and it gets overwhelming. And you, again, like the grocery store analogy I used, you have too many pairs and you won't do anything. And there's the best time of days to trade for London and New York. And you can use the guideline of our planning sessions as your timing. Fran says indicators are super useless. They're a trap. Yep, I agree. Is there any live trading in your room? No, but I tell you the trades I'm in when I'm doing the planning session, if I'm already in trades, and I tell you at the end of the planning session, I'm now giving out where my focus is going to be in the session if I'm not in a trade. Thanks, Aaron. He says, great and different presentation. What do I think about institutional trading? I think it's great if you join an institution and do it, but really, this is geared for at-home traders. And in fact, there's a whole different, Jared Tendler, who was on our webinar last week, talked about the difference between institutional and at-home traders and how there's an entirely different style of managing those traders versus you managing yourself. In other words, he didn't know it, because I asked him, do you have to go through some psychological profile? Because he said they don't put up with people who lose their, too often. Sure, can you get angry and stuff? But no, you have to have your act together mentally when becoming an institutional trader, or you're already trained. Our risk to reward, Danny. Hey, Danny. It's typically, I like to suggest at least new traders go for at least 1.5 to 2 R when they start out. But mine is a lot higher. But, I'm an old dog trader. SK says, which Forex brokerage in the US do you use? Oanda. It's the best one for us simply because we use very tight stops. And they give us the best when it comes to variable stops, which we have to deal with. Do you prop trade? No, but a lot of the guys in my group do. John. Do you use robots? Absolutely not. Jeez or Jez says, how long does it take the average person to get good with the Patty process? Well, of course, I'm going to say something like it depends because, you know, the average person, if they have a good understanding of their psychology, it can take, if you're brand new, it could take 6 months to a year. But if you've been trading for a while, I have some traders that came to me after 6-8 years of trading, and oh my God, they just like glob onto this and are off to the races. It's pretty much, SK says, does your method work for trading Forex futures or just spot? You can use it for futures, but we don't. But I have had some traders use it for futures. So yes. 248016 asks, what is a penny order and how to use? I don't know. I'm not familiar. Pending order? Pending order. Maybe that's what you mean. A pending order is something that you place, that you wait for a certain price level to be hit, and then you want to be pulled into the trade. So it's something you place on your broker platform. It's either a buy order, a buy limit, sell order. There's market orders, which are direct. You just hit it on the chart. All right. Thank you. Good questions. I know I'm ending a little bit early, but if there's any more, I'll go ahead, or not anymore, I'll go ahead. Do you earn your main income from trading or teaching? Trading? Anyone else? If not, I guess everyone will have a break before the next speaker comes on. Anything else, David, that I need to know about? Otherwise, I will say goodbye and thank everybody for listening and asking great questions. I really appreciate the interaction.